Ladies and gentlemen, good day and welcome to the Q4 and FY'25 earnings conference call of DCX Systems Limited. Please note that this conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference call is recorded. I now hand the conference over to Dr. Raghavendra Rao, Chairman and Managing Director of DCX Systems Limited. Thank you and over to you, sir.
Thank you. Good evening, everyone. Namaste and welcome to our Q4 financial year 25 earnings conference call. Along with me today is our CFO, Mr. Divakaraya, Mr. Shivakumar, VP Operation, Mr. Prasanna, Senior DGM Finance and Accounts, Mr. Manjunath, Senior Manager HR and Corporate Affairs, and our IR team, Adfactors. This year has been filled with several significant development and key milestones. We continue to strengthen our consolidated order book, rupees about 2,855 crore as on 31st March 2025. Further, I wish to highlight that DCX, our subsidiary, Ranil, continues to be debt-free from last 2 quarters. Also, I wish to convey that recent Government of India has introduced RODTEP scheme, including our SEZ, from 1st June 2025. This will be benefit DCX in improving the profitability margin. I would like to highlight that Indian defense industry has proved its capability in battlefield in the recent fight against terrorism, which made many parts of the world looking at India for its defense needs. This shows the importance of the defense and aerospace sector in the ongoing geopolitical situation. In light of this, DCX is focused to develop manufacturing and supply technology advanced product to the Indian Defense Forces and our global customers. Now I invite Mr. Shivakumar, VP Operation, to highlight the key development of the company in the last 6 months. Shiva, over to you.
Thank you, sir. Namaste and good afternoon to all. I would like to highlight few key developments of DCX in the recent past. DCX has received several new orders in the last 6 months, out of which the most notable ones include the 2 orders from Lockheed Martin Global USA, which is a leading name in the defense and aerospace industry, with a total order value of about 840 crore rupees. Further, the next being an order from ELTA Systems, Israel, for manufacturing and supply of close-in weapon systems, module assemblies, which is worth about 483 crore rupees. And these achievements clearly reflect our strong growth trajectory and the robust demand we continue to experience. This is truly gratifying to see DCX is increasingly recognized as a preferred partner by leading global players for the delivery of mission-critical products. We attribute this success to our unwavering commitment to quality, on-time delivery and production excellence. Now, I would like to highlight some of the other major developments in the past 6 months. As you are all aware, DCX has entered into a joint venture agreement with ELTA Systems Israel to engage in the development and manufacturing supply of airborne maritime radar systems, fire control radar systems and other radar systems for both airborne and land-based applications under the initiatives of Governments of India's Make in India. Now, the proposed shareholding in this JV company will be ELTA Group owning about 63% and DCX owning the 37%. Another important milestone which DCX achieved is the establishment of new domestic tariff area unit both by DCX and its subsidiary Ranil Advanced Systems. And this has been set up keeping in view of the increasing domestic requirements under Make in India initiatives. This facility will support manufacturing activities and the commercial production is expected to commence in the near few months. Now with these updates, I would now like to hand over the floor to our CFO, Mr. Divakaraya, to walk us through the company's financial performance. Before that, I would like also highlight that recently our subsidiary Ranil also received Defense Industrial License from MOD for manufacturing the highest classified project, the top secret project, which comes under category A classification. This is also a greatest milestone and a feather in the cap of Ranil. So, thank you all, and over to you, Divakar sir.
Thank you. Thank you very much, Dr. Rao, sir, and thank you, Shiv Kumar. Good evening, everybody. We appreciate your joining us today as we present a detailed overview of our financial and operational performance for the fourth quarter and full year ended 31st March 2025 on consolidation basis. Coming to quarter 4 FY'25, the revenue for the quarter stood at 549.96 crores and EBIT stood at 30.01 crore in quarter 4 FY'25 vis-a-vis 51.91 crores in quarter 4 FY'24. This is down by 42% on year-on-year basis. Accordingly, the EBIT margin for the quarter decreased to 5.46% as compared to 6.96% in quarter 4 FY'24. Profit after tax, that's PAT, for the quarter decreased by 37.18% to rupees 20.7 crore in quarter 4 FY'25 from rupees 32.95 crore in quarter 4 FY'24, which led to a decrease in PAT margin by 66 basis points. In FY'25 versus FY'24, the operational revenue stood at rupees 1,083.67 crores in FY'25 and EBIT stood at 71.27 crores in FY'25, which led to a decrease of 216 basis points in EBIT margin for the year to 6.58% as compared to 8.74% in FY'24. Profit after tax for the year is at rupees 38.88 crore compared to 75.78 crore in the same period of last financial year. Year-on-year decrease of 48.69%. PAT margin is down by 173 basis points. Before I conclude and hand over the mic back to Dr. Rao, I would like to draw your attention to the following two very important takeaways from the operations of financial year 25 versus financial year 24. As you all would have noticed, the cash flow from operations for the period ending 31st March 2025 was recorded at 443.5 crores compared to 0.7 crores, which is 70 lakhs, for the previous financial year. This was possible only due to improved operations during the period under review. The company continues to be a net debt-free company for the consecutive reporting period during the year, which was possible by prudent financial management and operations excellence reported during the period. These are the two very important points which I would like to highlight, and thank you. We now invite you to share any questions, feedback or insight as we open the floor for discussion. Now I am passing on the mic to Dr. Rao for his closing remarks. To you, sir, Dr. Rao.
Yeah, I think we can take the question. The end of this thing, we can have a closing remarks. If anybody have a questions, we can answer them.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Dipen Vakil from Phillip Capital. Please go ahead.
Hi, thank you for this opportunity and congratulations on robust order wins in last 6 months. My first question is again on the lines of the order pipeline and the order wins. Post the recent operations Sindoor, and even have you witnessed any increased inquiries which are coming from the likes of Delta Systems or other partners for DCX system? And what kind of order pipeline are you looking at for FY'26?
Basically, as I mentioned, this is the biggest landmark for Indian defense companies, where we have proven our product has been designed well and it is usable successfully. It has been proven. You all know the stories. Now, defense requirement, of course, this recent activities happened very recently. Of course, there are a lot of requirement, not only from India. We are getting big inquiry. Big companies are contacting because of the quality product what India delivered today, Indian defense companies today. And we are having a huge hope and huge inquiries from the various countries. And of course, it is through existing partner and various locations. And looks very promising for DCX and well organized, and our product, what we are manufacturing with my partners and other associate, what we are doing. And it is a very key product, what we are doing in the defined systems, where we have a lot of requirement and inquiries are coming. And we are, of course, this has been started very recently, and we are participating. Almost their requirement about 50-60% what we are able to get an inquiry. We are able to bid and give a technical support, give a demo, and give a many things happening. But look very promising and shows India's capabilities today. And I don't know the existing regarding Operation Sindoor, successful of Operation Sindoor, and it's given a really big exposure for Indian defense companies because of the proven products. Now, existing they are going back to the regular business. Order pipeline, normally, I never disclose until we receive the PO. We never disclose the what value until I get a confirmed PO from customer. I never disclose the volume, but looks very promising, and I'm thrilled and getting the inquiries and materializing is happening, and definitely we are in a good position in upcoming days. I hope I answer your question.
Got it, sir. So right now, your current outstanding order book, what will be the execution period for the current outstanding order book, and what kind of guidance would you like to give along with EBITDA margin guidance that you would like to give for FY'26?
This present order book can be, in my view, in the current situation, because of it is not like previously for a long lead time and other thing. It will be around 2 years, maximum 2 years it will getting. This is a delivery schedule. Of course, customer wants early because we have a constraint in all recent POs. We need to see. It is not like only supply chain. It has to be go under the make to order parts and get the parts in licensed part. There are a lot of constraint and qualification tests. In my view, in the schedule wise, we are able to complete this in 2 years. This 2008 plus 500 crore, whatever we are able to complete. And definitely I cannot give you the exact figure. There is an improvement in the EBITDA margin also, all these new POs compared to the earlier one.
And any guidance on revenue part?
Sorry, sir, I couldn't able to. Normally until we proven papers, until we sign it off, we will not be able to provide, and that is not my practice.
Sure, sir. I'll get back to the queue for further questions.
Thank you.
Thank you. The next question is from the line of Shikhar from Vivo Commercial Limited. Please go ahead.
Mr. Rangarao, Dr. Rangarao, you have done a turnover of 1,000. Hello?
Yeah.
Hello. You have done a turnover of 1,000 crore in March 25, and you made an operating profit of 5 crore. Is this the business model? What kind of business model do we have this? Because not even 1% EBITDA margin you have in the business. after doing a turnover of 1,000 crore, I have not seen any number where any of the balance sheet, 4,000 listed companies are available.
Okay.
I have never seen a company which does high-tech product and make a profit of 5 crore operating. And what kind of business we are into? Can you elaborate?
See, one thing, it is, I will tell you the main reason. DCX works with a different method with the customers. Now, in highlighting this thing, there are, this all a high duty, heavy duty PO, and there is a, suppose I get a PO today, okay? Then it will get executed minimum take 1.5 years to 2 years. Okay, there is a class in the PO, what we received from the customer, almost 90% of my customer, there is a BOM guarantee class. Okay, this BOM guarantee, what is this BOM guarantee class? See, we finalize the price today for a raw material. Major my expenditure goes with the raw material. Today I finalize the price for, let us take in the bill of material, we calculated $100 for each product. And this will be when we, after 1 year, we keep on releasing PA, buy the part, lead time, everything. It is gone up to $110. So customer is not going to amend the PO of $10 immediately. Now I need to buy $110 PO, get all the material, then do the reconciliation in the financial year. This is a practice. I will get back this money, the $10 whatever I spend extra, I will get back the money into my account in the end financial year. This is a practice because
Okay.
all heavy duty, if you are going to do, keep on amendmenting for a 7,000, 8,000 line item component, so other than amending a PO, they don't have any job. So there is an understanding between a customer and between a supplier. So this money what we spend on the extra we spend, we have accounted and we do the consolidation in the year end, take back the money, then definitely our margin will get improved. This is the practice.
Okay. Okay. So now I come to know that you are having you claim your extra cost of your raw material and it comes subsequently. Is that correct?
Yeah. Yes, yes.
So for 2023, 2024, you must have raised a lot of, because your EBITDA margins have been like this only from last so many years. Operating profits are so low. So where is that money gone? Why is it not reflected in 2025 accounts for a money received in 2022 or outstanding of 22 or 21 or 24? Where is it getting then? Where is that money?
Okay. Now, your question, I didn't understand in the finance language. Prasanna, you understand what they're talking?
Yes, sir. Yeah. The sir is asking, what about the 2020-21, the turnover? There also we should have some BOM guarantee. That should be reflected in the financial now. So, the current year,
No, let me
it has been, see, what I want to know, Dr. Rangarao, you have been running your business last 4 years, what I see. Now, I want to know how much money you made in 4 years and how much money you have raised through the capital. If you have not raised the money through capital, you wouldn't have. So what you have done, you are showing profit is only your other income. Because of money you have raised from the shareholders at 400 rupees or 450 rupees or whatever price, and that is only a financial profit you are showing, and your loan liabilities is nil, and your interest you are not paying. So you are not doing any business money. You are doing business only by raising the money, and that is all interest income you have generated. By doing 1,000 crore turnover, 1,500 crore turnover last year, 24, in this year 1,400 crore also when we discussed, you said that in the subsequent year you will get that money. Now in 25 also the accounts are reflecting same. So what is the accumulated amount which you have to receive? As of 25, if it's 500 crore or 200 crore or 100 crore for which you have raised the debit notes, How much you have to receive? Because you are not reflecting the true fair view of your accounts.
Okay. Now, it is not raised the invoice yet, plus how many, what we spend extra money. There is a process. Once the closure will be done every year in the March. It is not subsequent amount in the last 2-3 years. So now, whatever, let us take, we had one long-term PO of 4 years PO. That PO has been closed from our side, we executed. Then there is a engineering cost, bill of material warranty, OJT cost, engineering cost. It has to be calculated and submit to the customer, then we'll get the money back. Okay, this
So
is
when will you, so how much is money which you need to claim?
No, we are already, my team is went due to war situation, they couldn't travel to Israel. Last March also, we supposed to get the rice bill for this March. This year also, due to the various reasons, because project got closed only last month, we have to reconciliation. My team went, given the consolidation report, then it has to be approved by finance. Once that is approved by their customer, 2-3 customer has to approve, not only for one customer, it has to be consolidated. Then most likely, maybe in the next quarter, maybe in this quarter, maybe we'll going to close. Once they
I agree.
Yes.
Mr. Rangarao, this reply we have been hearing from you from last many con calls. So we don't buy this argument. Listen to me first. Listen to me now. If you have done so many customers, so you should by now know, because you are not doing any business, according to us. You are not doing it. You are doing some business, but this is just buying some raw material and supplying them. But it is not reflected in the true fair view of your accounts. How do I, as a shareholder, know what company is doing? How much my company is making money?
And once I have to get approved from the customer, then only I can declare that there are...
No, but you must have got the proof. You must have got the proof. No. I've never seen a balance sheet. I have been investing from 1983, last 40, 50 years, and I've studied more than 4,000 balance sheets, but I've never seen a balance sheet like this into high-tech business. In a high-tech business, a client like L&T and foreign clients, you have a business model by which you don't show any profit. And money is being paid, shareholders' money is being used to do your business. And there is no money on it. Even if you had utilized that money 5% on a bank FD, you would have generated more money than by doing this business and doing this people. Because I don't understand any of your business. Who is your competitor? What kind of business you are into? When we try to ask to Mr. Shivkumar, try to understand the operations, he does not know, you people don't come on the line. I tried talking to you many times to understand your business, but you people don't give time to shareholders. I want to visit your factory, but you don't give. So how do we work?
No. We definitely...
How do we respect? Now you have so many people on the con call. Ask anybody who has understood your business.
See,
because you have been giving same con call, same conference call, you read your conferences call, and you make out anything. Can you make out anything out of it? And there is nothing, there is no business model.
No, if you allow me to speak, I will tell you few words.
Please tell me, sir.
Now, I am not aware you are trying to reach me. I am hearing your name first time. And there is
I have talked to Mr. Shivkumar and
Sorry to interrupt you, sir, but we request you to rejoin the queue for follow-up questions. Thank you.
No, 1 second, I will finish the call. Please, we'll talk separately. I am available. Anytime I can visit or I can come to Bombay. I will make you my business understand, explain you not in this call. It will take time. I need to write and show some presentation. Then will you understand. I am very much available on the call. We'll definitely connect back to you. Okay, sir?
Okay.
Yeah.
Thank you. We'll take our next question from the line of Darshil Jhaveri from Crone Capital. Please go ahead.
Hello. Good evening, sir. Hopefully, I'm audible. Hello.
Yeah. Please go ahead.
Yeah. Hi, sir. So, sir, some questions will be somewhat related to previous participants' question. So I just wanted to understand what is the margin that we get in our business, because as you are saying, there is money that we are supposed to be claimed. So could you just quantify how much money is that? Because right now on 1,000 crores, we've essentially not made any profits in terms of operating income. Whatever other income we have gotten is from assuming the 1,000 crores that we have in bank with us. So number one question, what is the money that we are left to claim? And secondly, is it getting reflected in our trade receivables? Because some part should be getting reflected in our trade receivables, right, sir? And going forward, like, what do we see our FY'26? Because I think for FY'25, we were hoping to do the revenue that we did in FY'24. Not has the revenue come, nor has the operating profit come. At least a technologically company like us should be doing, who's doing so much research, should have double-digit margin. Forget about double-digit margin, we've not even cracked 5% margin in this current year. So I would really love for you to just explain these points, sir. Thank you.
See, already I mentioned, until there is a money to be collected from the customer side, until they given, of course, we need to give, we need to get good amount of money. Until they say, suppose I said 100 rupees I will get 50 rupees. This will not be correct on my part to tell you the wrong figures. Once it is approved, we are on top priority and working on it to get back the money. I cannot tell you the exact amount to how much I am getting back today. Please allow us a month's time. Maybe we are in the process of closing everything. There are many processes to be taken place, because it is not a small money we are talking. Okay? Please allow me in that. Secondly, we are not a product-owned company, for your kind information. We want to become a product company. We are in the process of becoming a product company. We are a build-to-print company. Okay? And customer gives everything to us. They will give advance money. They will give you test equipment. They will give you technology. They will give assembly instruction. We buy the component, assemble the PCB, do the cabling, do the system integration, export it and do. And I am completely understand, don't please compare with the OEMs, the product-owned company, which they have taken 20 years to develop a product. Okay, this is a build-to-print company, and we are in the aerospace and defense. Everybody had aerospace and defense have 30%, 40% margins. It is not, we are a just 10 years old company. We started growing. We need a time to grow up, become a product. Okay, that it is happening. Otherwise, there are 2 JV not happening, and our margin, it will not go up like 20% or 30% current situation. And improvement, we are working continuously on getting our profitability high. But current situation, you are seeing the balance sheet and you will not be able to give the figures, what is the bomb guarantee. That class I cannot avoid. I need to accept that class. This is it is business model is like that. It has to be spent, then climb back. And this once, it is not in receivable in books, because we are not raised the invoice. Until they give a clearance, then I need to raise the invoice, then only it will come on the receivable books. Please allow us time. We are trying to work out conclude the bomb guarantee cost, get back the money and start doing it. So it is not like I am telling you from tomorrow I will do, next year I will do 15 double-digit margin. It is not easy in our business, because everything is secured here. And you are telling about you are earning only the FT money. It is not completely on the IPO money or QIP money. There are other income, our money and the customer advance. Other money also, interest also part of the parcel, but maybe it is not appearing in the balance sheet, sitting on other income. There are indirectly benefit to the advance money which customer pays, where my finance is going to take care of the earning more profit to the company. This is the schedule. And it is not simple to understand, as rightly said somebody in the previous call. My business model, it is not easy to understand. It took me to take about a year to explain to some of the key investors. And I don't mind explaining to individually, where we are planning to come to Mumbai, or you guys can come here. I can give you the complete presentation, how my business works, how I am doing the business, how I am improving the margins, what is my plan. Definitely I can explain to that.
Sir, I understand that, and I'm not trying to say that why the money is claimed. I understand that's a business practice. I think that everyone understands. But if it would be really helpful, there could be some quantification to it, right, sir? Because just from an investor's perspective, we are seeing. I understand, okay, there were 555 to margin, and Q4 supposed to be one of the best quarters for us historically. And in that, we do not see a margin, so that just raises a question. So in terms of a financial statements, it should get reflected somewhere, right? Even if in a notes to accounts or even in a presentation, because that money, as you said, is rightfully ours, right? Even if we have to claim it, we might not get full of it. Out of the 100 rupees that you extra spent, we might get 50 rupees or maybe even 35 rupees. But at least a portion of it is rightfully ours. So we need to know, at least the investors as a whole, the community will please appreciate it if that's mentioned how much it is, so that we can, you could even put a line of adjusted EBITDA that, okay, this much money is to be claimed, and that would give us a truer picture of the financials. Because on the look of it, it just comes off that our operations are not generating profit, which is what me and the previous participant, a lot of investors are looking at, sir. So I would really appreciate if you could just release a press release, or maybe after the call just inform the investors this is the money that we are left to be claimed. I'm sure you would be having the record of it. And the number two question, maybe it is an accounting question, maybe the CFO sir can help us. If this money we are not showing in this year, but if this money is just expensed out right now, when it comes next year or maybe next to next year, well, is it reflected? Is it reflected in the revenue? Because if it is reflected in the revenue, then how much of the current year revenue is comprising of our expenses of last year? That is also supposed to be clarified.
Prasanna?
Yes, sir. Yes.
One first question, I will tell you what is the possibility, why we are not, is it possible to mention somewhere in the note? I will check, but again, I am not comfortable. Suppose 100 rupees I supposed to get, I will get only 35. Maybe it will go into 60 or 30. I don't want. Anyway, we'll check the possibility of that. And suppose, Prasanna, this variation of BOM variation is coming on the operational income only, right? Because we
Yes, it is operational income.
Hello?
Yeah, it is operational income.
So in the current 1,000 crores, does it have any last year's income?
No.
No.
So only this current year we are not supposed to claim.
Yes, 1.5 years we need to reconcile and claim for the short.
Okay, sir. And just on a last question on my note.
Sorry to
just last
interrupt
as
you.
if I can.
Sir, but we request you to rejoin the queue for follow-up question. We have other participants waiting for that.
Okay.
Thank you. The next question is from the line of Aditya Trivedi from Nipin Capital. Please go ahead.
Yeah. So for NIAT systems, what is the current status of product qualification for the radar-based safety systems in Indian Railways? And has any pilot testing or prototype approval been achieved? And what is the anticipated timeline for certification and the first commercial order?
Okay. NIAT is, as you know, we are already received a 5-number order. It is deployed from last 1.5 years. Trials are going on, and they asked for some more modification in last 7 months. We already deployed 2 systems with what is the requirement from the RDSO side, and deployed in the one diesel loco and giving performance. And all the tests are passed. Only one last test, that to 50% is through, because of the one fog test, because fog range, it is not much in the Lucknow side for when we do the last December fog test. That is the one fog test is pending. That hopefully is going to complete in this upcoming fog season. And as on today, we have completed all the tasks, what is the requirement, and what is the complete requirement modification required for the railway, which RDSO we have done it. And we are final test is pending, that only the product is ready. We need to have a fog to be season to become and do the final test and take the certificate. This is the trials. Upcoming program, it is, the upgradation of railway for only not on the CapEx side and the upgradation of electronics. There are good amount of money allocated by Government of India Railway, and we are expecting the tender very shortly. We are working on that. Till now, it is no date and what is the quantity when the tender comes, we don't have idea, but we are closely monitoring on this. And we participated in the Metro in the last system, and there are a lot of course, the international exhibition happened last week in Delhi, and RDSO team, Railway Senior Board Member team, also some of the foreign company have come and see our demo and everything. They are happy. We are also working with some other global company for the good requirement of these systems. Maybe about 240 system we are working for other country. And we just received a specification which our product is getting matched. Most likely we will going to submit our proposal to them by end of this month or first week of this thing. In fact, it is happening directly when my Israel team is handling with other country. And they come and saw the demo in Alstom, what we have done, and they saw the demo in Israel. They are happy about the product. Again, the same spec can be matched their requirement also. I think 250 number, the set they are looking, which we are submitting proposals. That is a recent development happened in the last 10 days back. This is an update on the act.
Okay, and if you could just highlight both from a domestic and export perspective for the locomotive business, what is the total addressable market and what even the margin profile of the opportunity?
Market is India is big. As you know, about nearly 15,000 locos, what we have it in India. So we don't know what is in my view, whatever we heard from the other sources and other things, Government of India, it is very serious on the railway safety, and we expect it to get in the overall in next 5 years about 5,000 to 6,000 locos to be deployed our product, and it is in my view it will take some months to get not 5,000 6,000 at a time inquiry, maybe small bulk order comes, and in the overall of 5 years we are expecting to 5,000 to 6,000 loco to be installed our product, which we are confident. That's the reason we put a lot of effort in the money, effort, and the demo has been successful. And other country, we have a total in visibility in the next 3 years about 1,750 units for other country. So overall looks, India is a big market. We are a bigger size of locos, and we are working on that. But presently, the price, very competitive price what we are working, and is as I mentioned, our own product got a very good PBT margin in this, and looks to be very promising.
Yep.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Vidit Shah from Spark Capital. Please go ahead.
Hi. Thanks for taking my question, sir. So my first question is on the process that we follow when we quote pricing to our customers. If you could just help us understand what sort of margins that you all look at, even a range will do, and specific margins, because I understand it will be different by different products and customers. But what sort of range of margins do you all look at when quoting prices to customers for particular POs that we are receiving?
As you know, we are doing 4 vertical of business. One is a cable business. There, I cannot say exactly the normal typical, of course, because how do I put it? In margins, it is an open call and is recorded. Everybody, my competitor can listen and understand my costing. But still, there are 4 vertical. Cable is a double-digit margin, what we quoted. And the PCB about within a 10%, PCB assembly within a 10%. Then go to the system integration. The value brought normally our costing works based on the bill of material complexity of the product. It will range from, it will go to 5 to 12% sometimes. And also the kitting maybe does, because we are doing for the kitting electronic inspection costing, it may be about range of about 7 to 8%. This is what is calculated. I cannot tell you exact. That depends. See, today I cannot tell you my cost is this much. See, some of the modules got complex assembly, some of the modules got special test requirements, some of them are environmental tests. That depends on the product, what customer comes with me. Based on that, my margin, assembly cost, loading, and the complexity of the delivery, everything matters. Any special licenses, special chemical tests will be done. That depends. Normally, typically, cable, I can say it will go on a double digit and go this system integration about 8 to 10%. That depends. And I cannot say this is the product is my fixed. No, because I do multiple programs for different customers. And of course, we are how we improve our margin. That is number one, to capture more customer and do more value addition and less work to the customer, where they can give us the PO and go. And also there is a Make in India program and 50% indigenous content to be buy in India. So these are all possibilities to improve our margin.
Okay, sir. Understood. Also, could you help us quantify the amount of external sales Ranil has done in FY'25?
Sorry?
What is the external sales that Ranil has done in FY'25? Not the captive consumption by the parent, but how much of Ranil's business has been selling PCBAs to external customers?
No. External, maybe I'm not sure. Maybe about 1 second.
Around 400 crores.
Around 350 to 380 crores. I'm not having exact figure with me. About 380 crores.
So we had won an order from Lockheed in Ranil of about 380 crores. That has been fully, given and satisfied.
There are some small pending amount, but 90% is completed.
Okay. So just one last bookkeeping question is, we've seen an increase in intangible assets and other current liabilities by about 270 to 300 crores. If you could just help us understand what has led to this increase in both these balance sheet items.
Yeah, sir, I'll take this question. Prasanna here. So whatever you see in the balance sheet, the 280 crores intangible, that belongs to NIAT. Their intangible property of NIAT for whatever that R&D has done from their end for this product, that has been capitalized as an intangible, and it is sit in the balance sheet.
Okay, and what about the other current liabilities?
So there's a
that has gone up from 32 crores to 385 crores with us.
So this consolidated balance sheet contains the details of 3 companies, which has month-end payables, trade payables, salaries, other expenditures, and statutory dues. All these are comprising to current liabilities.
Well, trade payables isn't that different line.
Yeah, sorry, trade payables are shown separately, sorry. So it's a it's year-end expenditure, like employee benefit expenditure, gratuity EL provisions, all these provisions which are current liabilities, all under current liabilities.
Okay, but so that would be the same last year as well, right? So that, like, if the line was 32 crores last year, why has that increased to 385 crores at the end of March 25?
No. Last year it was not there because the NIAT was incorporated, start operation from May 2024. And Ranil has started its operation from September 2024.
Okay, so are we saying we have 380 crores of payable because of expenses in these 2 subsidiaries?
Yes, of course, it has DCX and it's 2 subsidiaries.
Okay.
So we request you to read.
I'll get back into you. Thank you so much.
Thank you, sir.
Thank you, sir. Thank you.
The next question is from the line of Mohit Bansal from Sama Partners. Please go ahead. Mr. Mohit, your line is unmuted. You can go ahead. Since the line from the current participant is not reachable, will move to the next question. The next question is from the line of Sunil Kabra from Capsite Advisors. Please go ahead.
Hi, sir. Thanks for an opportunity. I just wanted to know that, as you said, the locomotive product business for 5,000, 6,000 locos going forward, are we looking at on the railway safety side, which is very high today in terms of allocation by the railway towards the T-cars? Are we looking at some opportunity of our products?
Yeah, safety system only. Yes, you are right.
So as you rightly said that you are not a product company right now. So can you throw some light on this T-cars product which is underway under your R&D or somewhere in your company?
NIARC. Okay. See, NIARC basically is a product company, does radar-based obstacle detection system. It is 4 years back, ELTA started this, Israeli company. And they are, ELTA is the fifth largest in the world expert in the radar company. They use the technology of radar and optics and their algorithm and use their technology. They've developed this product for railway safety, which we are taken about 51%, 50.1% majority there, investing about $25 million. And we are a partner for this. This company does completely on the railway security. This will go into obstacle detection system. This is a 100% OEM product. This has to be, he's got his own mileage, and in the as on today, in our knowledge, world doesn't have this product to meet this requirement. So this is a product company, what we are having it today.
Okay. Thank you. Thank you.
Thank you.
Thank you. The next question is from the line of Mohit Bansal from Sama Partners. Please go ahead. Hello. Mr. Mohit, your line is unmuted. Can you hear us?
Hello, am I audible?
Yes, sir. Yes.
Yeah.
Okay. Good afternoon, and thank you for taking my question. So my first question is regarding the recently announced JV on radar with ELTA. Sir, any guidance on CapEx and when you're planning to go live on that?
The JV, what we have signed with the ELTA system Israel to manufacture and develop and supply to the armed forces. One is airborne radars, ground radar, counter UAS system, and many types of related to radar and sensor what we are planning to manufacture in India. This already product is not a newly developed product. It is proven in the worldwide, this product. And now we have started this JV, signed the JV, and we have a straight target to achieve this JV company within 11 months to start this operation in this company. We are in the process of setting up a plan, finalizing the capex and everything. And 11 months is the target to achieve this operation to be started in this JV company. So it is a product company.
But have you finalized the numbers, sir, in terms of what capex you want to put up and how you're going to finance?
No, actually in the company we are putting our capital as a cash, and we'll have a total. Of course, there are capex requirements like building, plant, equipment, and many things. Still, we are under finalization. Most likely, it will be in the next 10 days. We'll have a finalized numbers because there are many test equipment. We are working with the supplier to price negotiation is going on. And this will be about 200 totally 200 crore, not 200, 150. Okay, exact number we came to know only in the next 10 to 15 days. Is a capex we are putting that to the building capex, test equipment. There are certain key equipment to be bought. Still another 10-15 days we'll finalize with the supplier whom to buy what is the final price. And this is the situation. By 11 months now we'll want to go live on this new JV company.
Okay, so will we get an update on the exchanges in terms of when you finalize these numbers?
I don't know whether it's exchange. Okay, we can have a maybe next quarter conference, or I don't know whether it's related to this thing. But we'll definitely going to inform you what is the capex and other things. Yeah, definitely.
Okay, so one last question on NIRT side, sir. What I wanted to understand was this NIRT technology that we have. The use case is only for railways, or it can be used for other manned and unmanned vehicles?
So presently, what we have developed is only railway only, and there are multiple use, but we don't want to think of now. We want to concentrate railway business because this is a big business opportunity. This radar can be used in multiple areas, but presently we are concentrating only on the railway safety.
Okay, okay. Thanks for taking the question, sir. That's it from my side. Thank you.
Thank you. Okay.
Thank you. The next question is from the line of Abhishek Jain from InvestWell. Please go ahead. Mr. Abhishek Jain, your line is unmuted. Can you hear us?
Hello, can you hear me?
Yes.
Hello, can you hear me? Yeah. So the thing is that, sir, can you tell me what kind of capex we are looking for in a joint venture with INTA for the radar systems, and what kind of target opportunities there, and the kind of revenue and operating margin that we are expecting for the next 5 years? Hello?
Capex, it is under negotiation with the supplier. We got a capex list. Till that has been finalized. Anyway, it is just 1 month this development is taking place, and we have a complete list what all that to be purchased. Until we are not aware of that's what I explained in the previous call. Previous person asked the question, and yet to finalize the capex. There are capex, of course, requirement. That list has come. We are working with the supplier to get the quote and prepare it, and we'll let you know once it is finalized. Maybe in another 15 days, we'll came to know what is the capex investment on this.
Kind of any type of business contract we have looked at before getting into the joint venture. So kind of specific figures we could have said we have done.
I'm not able to hear you properly. I'm not able to hear you properly.
Okay. What I'm saying is that I've done some business planning before getting into the joint venture. So any tentative figures you could have provided would have been good. What kind of investment you are looking into, kind of, approximation sort of?
Opportunity, it is in the billions. Okay. Because today, the business plan and the projection and the type of inquiry we are getting for a finished product with the technology. Of course, the product company which INTA developed last 25-30 years back, that is completely transfer of technology took place and started. And it's a big market, of course, in India itself, and the export market for some other countries also possible. And figures looks very mind-blowing it is runs in billions, but we have to start up a plant in 11 months. There are many opportunities coming to this JV.
All right, sir. No issues. Thank you very much about this thing. And what kind of capex that we are looking in our company, in this basic company, DCX system?
That's what I said. The capex was still has to be finalized. We are working with supplier. and yet to finalize the prices and what all the equipment we buy, and it will take some more time to finalize the CapEx. I will let you know very shortly.
So you are saying this thing about the joint venture that we are getting into with the Elta. I'm talking about the DCX systems. Do we need any more capacity CapEx?
Oh, okay. Sorry, sir. I thought JV only. No, okay. Prasanna, what is the CapEx?
Sir, as of now, we are not foreseeing any CapEx for this year. But if the new projects or if we award any new project and project demands, then only we will going for the CapEx. Other than the small yearly CapEx of some 10 to 25 lakhs towards replacement of computers or worn out machinery, we do not foresee any CapEx in DCX for this year.
All right. And sir, important.
Sorry to interrupt you, but we request you to rejoin the queue for follow-up questions. Thank you. The next question is from the line of Shashi Prasad from Invest Ventures. Please go ahead.
Rauji, you announced in the earlier Concall that we have to sign the partnership deed with Aerospace Services India for the MRO business in Delhi.
Correct.
So, what is the status of the MRO business at present for DCX system?
Yes. As you say, we signed the MOU with ASI for their partner for electronic assemblies and other things. And of course, they have some requirement recently got it. It has to pass through us. Still, there is a lot of process to be done at my customer end. They are working on it, and it is compared to last year. It is moving a little bit faster now because the MRO is required very urgently. We are part of that business, and of course, I have not received any input from them. This is the feedback I got, and this business is going to start shortly.
Fine. So my second question is that this ASI and Elta system has participated with Bharat Dynamics Limited and BLN. And BEL, and they have got a very big orders of around 2,200 crores and 1,500 crores or so. Are we a part of it? Are we expecting orders from follow-up order from them?
This is for Yes, we are definitely part of that. Already I executed this order through Bell for the LRSM, and if the Bell got an order, I am the only India supplier for their complete electronic module for them. If they get an order, definitely I will get a back-to-back order.
They have already got the order.
Sorry to interrupt you, but we request you to rejoin the queue for follow-up questions. Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer questions from all participants, please restrict your questions to one per participant. The next question is from the line of Jayesh Burji, who is an individual investor. Please go ahead.
Yes. Hello.
Boliye.
Yes. So you mentioned that intangible assets are 220 odd crores for NIAR, but we are not expecting any revenue from NIAR in the next 1 or 2 years minimum, right?
Yeah, 1 year at least. You can say it's an R&D company. The product has been mature now, and until we get, it will take revenue, proper revenue to, in my view, in next year should start.
Okay. So, but don't you think onboarding such a huge asset on our books without any revenue, significant revenue recognition immediately is not good for the company?
I'll take this question. Sir, this company is incorporated in Israel, and as per IFRS and as per Ind AS also, we have to recognize this as an asset, and this has been recognized as per approved accounting principles.
Sure. Okay.
Participants are requested to restrict their questions to one per participant. Thank you, sir. The next question is from the line of Venkat, an individual investor. Please go ahead. Mr. Venkat, your line is unmuted. Please go ahead.
Yeah. Sorry, madam. I was speaking under the muted. So my question is now, so what's the timeline? See that we have to get the pending amount from the Israel, right? Israel said some 2-3 customers, right? Is there any ETA? ETA means what is the target and deadline to receive that money back? So whatever the starting 2 questions, no? So what is the any deadline for that timeline?
In my view, month's time, 1.5 months time, it has to be reconciled. It's a old PO. It's a 4 years old PO. Project got closed, and there are a lot of reconciliation to be take place. And of course, we submitted. There are questions, there are answers, there are proof has been given from our side, and it will, in my view, it will take in 1.5 months max to get our things get settled there.
So it will reflect in our Q1 results, right, sir? After 26 Q1 results?
That's what I want to push. I want to push for Q1 result. In fact, we'll definitely. That is my target.
Thank you, sir.
So we need to see.
Thank you. We'll take our next question from the line of Sahib Singh Chaudhary, an individual investor. Please go ahead.
Hello. Good afternoon, sir.
Good afternoon. Boliye.
Sir, my question is regarding operating margin. Somebody earlier asked the same question. This year operating margin is almost 0. Last year it was 6%. And in the question of low margin, you have responded that there are certain costs which to be recovered from the customer, and until and unless it is confirmed from the customer end, you will not account for the same. But if I look into your last year conference, same question was raised about your decreasing in the operating margin, and you have responded the same reply, that the certain costs you have to recover from the customer, and until it is confirmed, you have not accounted for. My question is that, do you have recovered any amount during the financial year 24-25 related to previous year? Over to you, sir.
No, sir. We have not accounted, or we have not accounted any BOM guarantee in 2023-24. Yes, sir.
Well, this recovery within a year, then how this recovery is reliable, and we can expect that money ever will be realized or will be settled? If any amount with the customer you are not able to settle in a year, then how we expect that this amount will be recovered in future?
See, there are amount to be settled in 2 ways. One is if PO is ongoing PO, 3 years, starting from 3 years to ongoing PO, we used to get settlement. When the PO is getting settled in the 3 years, there is maybe first year there is a small variation, second year maybe not there, third year more variation. So until all this accumulated and go with the end program, that's what I mentioned in the same call. Until one project, major project in 2-3 customers got closed, in the old PO got closed. We need to reconcile everything and given a report. Maybe in 1 year, last 3 years, you're mentioning that no claim. No, there are claim, came, again increase, got a repeated order, same thing has been come. This a whole cycle is take place. Now every year used to claim, because we are able to unclaim the major amount in the last year, due to the PO is getting exacted for this recent year. So this all, it is a matter of, not only component variation, maybe I spend more, more on NRE, more on special equipment, more on testing equipment, more on timing. It has to be calculated, given them for approval. So maybe some of the program, it will get settled in the every financial year. Now some of the program, which getting PO get closed, then it will be settled in the 1 year, 1.5 year, like that. Of course, this is what we are looking for. This amount is 2-3 customers. It is a long-term PO, large PO. We are supposed to get it settled. That's the reason for this year. We are last year and this year it will taking little time, and this will go into anyway. This has been submitted, and not only this thing. There is a COVID has come. We couldn't able to travel. Then war started. We couldn't go able to travel, and PO got closed. All the reason got delayed. So we are now everything settled. We given from our side. Once customer approve, we'll get back our money.
Thank you, sir. Ladies and gentlemen, in the interest of time, we'll take this as our last question. Please get in touch with the IR for further queries. I now hand the conference over to Dr. Raghavendra Rao for closing comments. Over to you, sir. Please go ahead.
Thank you. I want to sincerely thank for our team, investor, partner, and all stakeholders for their unwavering support and cooperation. We truly appreciate your presence and involvement. For any additional question, please do hesitate to contact our compliance officer, Mr. Gurumurthy, and our corporate affairs in charge, Mr. Manjunath, and add factor for any query. Again, I am telling you, we are here to answer your question. Please don't hesitate, and we are very much reachable, and Gurumurthy and Manjunath are available. Please contact them for any query, and we are ready to answer whatever you want. We welcome to our factory also, sit with us, understand our business, and I want you to be clarity on my business. We don't mind spending time with you and give more explanation, and this is what I want to conclude my opening closer remark. Thank you. Jai Hind.
Thank you. On behalf of DCX Systems Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.